Maybe let my colleagues introduce themselves. Tough.
Hi, everyone. My name is Toph Cottle. I work with MFX Solutions. Been with MFX for about 2 years. Previously, was at the Federal Reserve, tracking global capital flows. Excited to be with you and share some thoughts.
And
Hello, my name is Georgi. I work for Responsibility as a Senior Investment Officer and Country Director, Georgia, for more than 6 years now. Before that, I worked for banking, mostly in Georgia, and bit consulting. Um,
Okay. Good morning. My name is Gianpietro Pizzo. I am the president of Micro Europe. Micro Europe is a newborn in investment in microfinance. It's a capital-based company based in Spain. We set up 2 years ago, and we started the first operation with a true investment, and now we are operating as three.
Yes, hello. Good morning. My name is Kaspars. I'm head of origination for Blue Orchard. Representing investment team covering the regions Central Eastern Europe, Central Asia, Caucasus, and Mongolia. As you might know, Blue Orchard is a impact asset manager, managing around 5 billion assets under management and addressing erosion and climate change impact challenges.
thank you very much. So my name is Michał Leci. I'm Polish, but I work for a Belgian asset impact funds manager called Impulse. We are managing three funds that are active in this region. They are all impact funds. I would say, we work with smaller and medium-sized MFIs. And maybe it would be good that some of you just, probably everybody goes from GDP, but just give some more insight. You presented yourselves, but just to say a few words about your companies.
Right. So MFX Solution is a hedge provider. So we really accomplish two main things in the market. One, you can think of us as a broker, right? So anytime that a client needs to place any risk, we're going to go out and survey the market and find the best price and pass that on. The second thing that we do is we have enhanced credit terms. This is really important for MFIs and lenders who want to deploy their capital rather than hold it in collateral. We do this through our model, which we have government guarantees from the US and Canadian governments. What this allows us to do is onboard clients with less collateral terms than what they would get had they gone to banks or hedge providers directly. What this means typically for lenders is initial margin of around 3% with no mark to market. If you're an MFI or someone based domestically in a country, we have slightly higher collateral terms. Over the last 15 years, we've done about 4 billion in hedging across 60 different currencies: Africa, Central Asia, Latin America. Our current portfolio is around 1.5 billion and growing very fast, specifically in this region. So really excited to be here. My colleague and I just finished a trip to Mongolia, where we met with a lot of the financial sector there as well, and very exciting to see the growth happening in the region. Last year, we completed trips across Azerbaijan, Uzbekistan, and Kyrgyzstan, and similarly, you see the excitement and the growth happening. So we're really excited to be here and be a part of this region.
yeah, Responsibility Investments is an asset management house based in Zurich. We have 4 regional offices based in Lima, Nairobi, Tbilisi, and Mumbai. So I represent basically Tbilisi office. I am head of Tbilisi office. We actually invest in impact finance. We have 3 main topics to invest. So first and major is financial inclusion. Second is climate, and also sustainable food. So our funds are domiciled internal funds are domiciled in Luxembourg. Also, we manage few external funds. In total, assets under management are 5.5 billion. And I can actually say that we've been very active in this region, in ECA-MENA region, especially for the last 2 years. We've been growing our portfolio quite substantially.
Yeah, just a few words about Micro Europe and why we decided to start this new venture. In reality, is specifically dedicated for Europe, not only microfinance sector, but related to financial inclusion in general. The mandate of Micro-Europe is to operate in Europe, of course, Western and Eastern Europe, but including the Balkans and the Caucasus. In reality, we decided to adopt a business model very challenging because our main product is equity. So to enter directly to invest and supporting the capitalization of institution. But important is to try to accompany a change process. So it's not only investment, financial investment, but is hands-on support with technical assistance. That is part of our origin because in reality Micro-Europe is composed by two components. One is a group of promoters, 8 promoters with experience in microfinance sector, practically all the totality of the promoters in different microfinance institutions, successful microfinance institutions in Europe, and other working worldwide in supporting microfinance sector. And on the other side, 3 anchor investors with a clear social vocation and orientation, Banca Etica, Fitrust, and Seed Capital Sky.
Yeah, I think I covered it. I'll just add that, we work in 60 plus countries, out of 7 offices. So the main asset classes that we manage is private debt, and that is also the team that I represent. So also public debt and private equity. All 3 asset classes, as I mentioned, focus on inclusion and climate as an impact goal. So that's it.
Thank you very much. So we have a very, I would say, diversified panel with funding providers, big funding providers, I would say medium-sized or smaller funding providers, and Europe and us, FX hedging solutions provider. The only thing diversity that is lacking is gender diversity. We're not very diversified this way, so maybe next time we'll manage to do better. So now I will just maybe make a very short introduction of the issues that probably all of you know, and we are here, for the ESG of course, but also for the money and for the financial inclusion. So last year in Krakow there was a conference of the MFC, probably most of you were there. I participated in a panel also dedicated to the investment, or uniting the investment in inclusive finance. Some of the institutions that are present here are not the same person that were on the panel. And one of the conclusions was that it was said, somebody said that microfinance is no more a buzzword, right? We need to attract investors. We need to find other arguments, not just the microfinance financial inclusion. And also, I think that we all realize that the region in which we are, so Central Eastern Europe, the Caucasus, maybe Central Asia, I don't know it, are not so much, I would say, are less popular, I would say, than 10, 15 years ago. And many of the investors, probably you are global, so you can say more about it, but tend to transfer to the what's called global south. But since the conference last year in May 24, quite a few things happened also, I would say, on a geopolitical level. So I just took a few events, like in January 25, we know what happened. President Donald Trump signed an executive order 14169, directly near total freeze of foreign aid. In February, they placed the employees of USAID on administrative leave. And the Secretary of State, Marco Rubio, announced that 83% of USAID programs will be cancelled. the DFC had frozen also commitments in many countries. After that, the UK, the Prime Minister, Keir Starmer, announced in March that the UK would fund increased spending on defense by cutting its aid budget from roughly 0.5% of the gross national income to 0.3%, which is the lowest share in the last 20 years. So mentioned State Development Bank, which is, by the way, a cornerstone investor of one of our funds, announced that they are closing down their Iraq division. The DG Grow in the European Commission decided on the 1st of May to disband the unit responsible for social economy and social enterprise. And there are some other examples of this type of situations. So I think that this is the situation that we're facing, and so maybe I just would like to ask you, how do you, your institutions, find yourself in this new situations, in this new situation?
Yeah, you can discuss if you want. No, I think, despite of this new political, and my point of view, negative wave we are experimenting, all the problems are there. The structural problems are there. So I think we need a very large, important strategic reflection as the different actors and stakeholders relating to financial inclusion, if we have the capacity to adopt a sort of a counter-cycle approach. Because if we stay in a very passive way, it's clear that all the problems we experimented is practically considered not important or not the priority in the panorama of the political agenda. And I think that could be a real failure for everybody. I would like just to mention what is our point of departure of Micro Europe, considering to stay as a new actor in this kind of not friendly context. First of all, 25% of small and medium enterprises experimenting financing shortages. 30 million Europeans lack access to formal financial services. 95% of MFIs have difficulties to find long-term capital, and fintech solutions need, of course, patient funding. So, respect of these 4 points, I think we cannot resolve saying, the political master, they decide to look in another direction, but we need to raise the voice about what is the real urgent social needs in Europe, but of course with the other friends and colleagues worldwide. So I think respect of this, we need an orientation, we need to create a cultural capacity to react, and of course to create best practices, to have very concrete action. In our small position as Micro Europe, we would like to try. We would like to try to respond of this part of problems, in particular for the problems of the capitalization. 95% of the microfinance institutional difficulties long-term capital. So that is why we identify equity and quasi-equity as our 2 main products. Of course, what it say? What is to enter, to campaign, to identify, to dialogue with microfinance institutions, how effectively we can support them. Of course, the governance problem is important to discuss. Our position is to have a minority stake, of course, not to entering to change the architecture in terms of property. But I think that is part of what we need even to link microfinance institutions to new frontier in terms of financial inclusion. I think the problem of migration is a big problem. And for example, to try to invest and impulse new vehicles for remittances could be important. That is part of our recently pipeline with some potential investees. There is a real important problem with the youth in general and to support young entrepreneurship in Europe, in particular for the situation we have in certain regions. And I think even to create, to try to bridge the gap between different regions. I come from Italy, and it's very complicated to explain sometimes the difference in terms of regional inequalities between, for example, southern part of Italy and the northern part of Italy. But the same in different region and different situation in Italy. And that was a part of the mission, for example, important mission of the European Union to create geographical and social cohesion. And finally, an important point, I think, is to try to create exchange at the level of Europe between Western and Eastern. Because even microfinance sector is very different in the two parts. On the side of Western Europe is more, of course, with a social important vocation, and social performance is a priority, but sometimes there is problem in terms of financial economic sustainability. And on the other side, we need to create more capacity of microfinance institutions in the Eastern Europe to couple their good performance in terms of economic financial aspects with social performance. So that is part of the role and our evolution. We would like to give a very small drop, but we think that is part of the spirit of cooperation we have to create. Thank you.
Yes. Yeah, I'll go back to the initial theme. Yeah. So, and I would like to start that the growth that we have seen over the past 5 years, we're coming really from the strong metrics. I think we have experienced 20-25% growth in the region of our portfolios, which has been backed by very strong growth, and I think demand on the end client side and our partners and MFIs and banks growing in the MSME segments. And and that growth obviously is also backed by the strong economic growth as well. Yeah, I mean in Central Asia and Caucasus, and all that growth is despite the fact we had COVID back in 2020, the war started in Ukraine in 2022. Despite all these challenges, we still have seen high growth, and still remains there. But again, that's what we have seen, and I don't want to like downplay recent developments and announcements by the government, which are alarming signals in terms of availability of the foreign aid, and the kind of the change in the foreign policy of some of the countries, if you may say so. And we see some, and I would say it's more like isolated cases when let's say lenders are posing their investments to some of the institutions. From my perspective, I see more challenge, which still remains that there is a gap between let's say the expected return on the emerging market instruments, and let's say if you benchmark it against the let's say government instruments. Also after these announcements with what happened on the market with the US, we have seen that actually US treasuries have increased the absolute return. If you take a look at this from the perspective of the investor, and you have opportunity to invest let's say in US treasury or in emerging markets, the gap that if you compare it, how big was the gap let's say before COVID, and right now actually the gap has narrowed. On the other hand, the risk in emerging markets in the asset class, basically in financial inclusion and microfinance, the risk hasn't decreased. The environment is, again we can argue, but generally it's not that it substantially has decreased. It's rather the opposite. So I just want to signal, that there is on the investor side, there is the expectation, that risk is compensated. But again, this from the positive side, this is backed off by let's say that local markets where we operate on the attraction of the local deposits, local capital markets, and again, still public funding being available, yeah, that kind of mitigates maybe these pressures for the increased risk and increased return.
Thank you very much. Would you like to add some comments, Georgi?
Yeah, I'll just build up on the Kaspar's point actually. So interest rate, I think it's the high interest rate environment is the issue. I believe also investors' expectation on the return. So to bring private capital into the market, that makes basically the difference. Also, what we see that partially related to hedging issue. So we see that need of local currency funding in our region. Especially, it's crucial for MFIs who don't have access to deposits. And for the last 2 years, I think hedging costs in many countries were quite high, and basically they were not competitive with the deposits, and also quite volatile. So yeah, I think that's the challenge. Just also this DFC, you mentioned DFC, right? So from our experience, we in partnership with DFC, we did actually we launched financial inclusion bonds 2 times in the past, in 19 and 2024. That basically both the transactions were quite successful, and we invested in financial institutions, mostly in a Continental region, proceeds from these transactions. And DFC played a crucial role, of course, bringing in private capital. So going forward, if we see that DFC is not anymore anchored investor, then yeah, it will make also difficult to bring some capital to this market, to emerging market.
Thank you.
Yeah. Thank you for the comments. I think they were pretty fascinating. One thing that's interesting about where I sit is I'm not doing investments, but I see all the investments coming to my desk where I invest them for hedging. 2 things I've noted since the announcement of tariffs and the subsequent back and forth has been notably notional sizes getting smaller and tenors getting shorter. I think that's very normal to expect when we have increased uncertainty. And we're also noticing some very interesting things in the market. First, when tariffs get cut off, all else equal, the dollar should increase. We have not seen that happen, right? We've seen investors exit the US dollar and the US markets. Similarly, you've seen, especially in this region, a lot of currencies make significant gains on their spot rates. However, because there's so much uncertainty in the market, offshore, we've seen hedging costs go up pretty significantly. That leads to, I guess, my first piece of advice, and we can get into this a bit more for MFIs, which is we should always be benchmarking what the cost is of capital domestically versus offshore hedging. I know that the MFIs do this frequently when they're fundraising, but my suggestion would be to do it on a monthly basis. Very frequently, I think in hedging, a lot of people are always very keen to look at the massive depreciation, and of course that's what we hedge against. What people fail to see sometimes is the longer term cycles and the domestic credit cycles and the international credit cycles deteriorating, or quarterly cycles. And so when they come time to do fundraising 6 quarters down the line, they go to look at the hedging rates and they go, oh my goodness, this was way less 18 months ago. And sure enough, if you look at the history of the hedging cost, just every month, it just went up a little bit. So my first piece of advice, I guess, for MFIs would be to constantly be benchmarking what is the cost of capital domestically if it's available, but also be planning and be aware of what the credit cycle is like internationally and what investors are looking to expect as far as returns internationally.
Thank you very much. I was a little surprised, I have to say, in this context, you said that we're growing 25% a year. So I think that the first question is, I mean, first of all, how did you manage to do it? Where is the funding coming from? And what are your arguments, the investors and potential investors to attract them? And I think that this is the general question to all of you is, how do we, how, as we know, I mean, the needs are there, right? The micro entrepreneurs, the small entrepreneurs, the social enterprises in some countries, they are still there and they have their needs, and this has not changed. So I think that the question is, I mean, first of all, it would be interesting to understand, how you managed to do it. But in general, for all of you, what are the strategies that you have to somehow keep the business running and keep answering to the demand, which is obviously constant or even growing.
Yeah, sure. I mean, demand is, as you were saying, demand is there. Demand is driven by growing economies. The demand is driven, again, country from country might differ. Yeah, that some markets are more saturated, some are more, let's say, on the growth phase. But as I said, generally we have seen Central Asia, Caucasus regions, substantial growth that is actually driving demand basically for own funds to be deployed as well. And then another aspect is, of course, if we take a global picture, yeah, and I think that Georgi mentioned, I think earlier as well, there has been some rebalancing that we have seen as well, that this region, yeah, where we are right now and we will represent, has attracted maybe more rebalancing towards, from the other regions, which maybe haven't seen such high growth, and maybe some other issues like portfolio quality or other challenges facing there. So that's I would say the main explanation.
Okay. I mean, yes. So maybe what is the attitude of your investors? Yeah, I understand you are not funded by DFT or USAID, etc.
Yeah. But I think, well, first of all, we have to be very, very concrete, very realistic. It's clear that we entering with a business model, with a strategy, but we know the difficulties and the barriers, no? Particularly, of course, in terms of to attract resources for investment in risk capital and patient capital. So I think our idea in what we are doing now is more, first of all, to raise fund among social investors. So to considering a very specific nature of the kind of investment. At the same time, we experimented with the first two, in particular the first investment, the capacity to create leverage. So on the base of our investment in equity, to facilitate, to accompany the investee towards different partners, financial partners, public and private. For example, consider EIF fund facility and some relevant banks. So the idea is to have a sort of blended finance, no? To create in this situation. Otherwise, we raise or we try to raise funds only in terms of private market. It's clear that the difficulties in terms of risk averse and even the cost is not corresponding what we want to do. But this is a logic in which I think effectively our role could be a catalyzer in the process to facilitate effectively to create a sort of an endorsement in particular of the good the potential investees to create impact, to create, for example, our experience with factoring, micro and distant factoring, I think is interesting because this is a first investment based in Romania. Now the company has practically spread in other countries, in Serbia, in Spain. And we know that there is a real need for this kind of capacity to provide liquidity to micro and small entrepreneurs. So that is the perspective. Of course, if we consider Balkans, we consider Caucasus, is more challenging, of course, for us in this small size we have now. But we have an open and we starting dialogue with different potential investors in the regions.
Okay.
Okay.
Yeah,
Yeah, so basically what we do is that, so we have, as I mentioned, we have external funds where we attract investments, mostly private investors. But also we manage few external funds, which is Global Climate Partnership Fund and Swiss Investment Fund for Emerging Markets. We took over this mandate from Obvium a few years ago. Also, we are one of the portfolio managers of Global Gender Smart Fund, along with the Triple Jump and Incofin. So basically, we try to mobilize all resources to invest in our market, in the frontier markets. Precisely on the economy region, I can say that demand was very high, partially maybe due to this high growth, economic growth, what we see after COVID, despite the war, but still some positive spillover, most probably. So demand was strong throughout this period. We increased in the region, our portfolio increased more than 25-30% around. Yeah, partially it was the resources were relocated from other regions, and partially thanks to this onboarding new funds, and we managed to grow.
Part of my job is helping MFIs and investors create hedging strategies, right? And this is specifically with currency risk, but we're always touching on liabilities, fundraising, disbursements as well. One of the first things I would suggest, and it's not super helpful right now in this uncertain time, but it's create a risk strategy and follow it. I see too often when the uncertainty is introduced, that's when the strategy changes. That's when it's too late, right? I stare at a Bloomberg screen all day, and I can't read the market. So, these traders at JP Morgan using algorithms trading, they're the ones who are making the arbitrage of the small differences and everything. So my suggestion is always set risk policies in advance, follow them, and then make an evaluation at a later date, make some edits and go forward. You should obviously match your risk strategies. The other thing I would suggest is building a bit of flexibility into this. So obviously always trying to match the regulations and risk profiles that the MFIs want to reflect. But one small example I will note is right now in Kyrgyzstan, it's cheaper to hedge onshore for 1 year than it is offshore. It's about 5% domestically and 8% abroad. So I'm telling my clients, you should go take advantage of that opportunity. Now, if the funding's for 3 years, there should be some flexibility in that. Maybe you hedge 50% to the 3-year mark at a higher level with us offshore. Maybe you hedge 1 year and take the rollover risk because it's 5% cheaper. So being able to build in this flexibility and being able to say, at any given moment, we're confident in the risks we're taking on, the calculated risks we're taking on, but also making sure that you have diversity from hedging partners, but also risk, which gets into my next point, which is diversifying across periods, but also across lenders, what we're seeing in capital. I think this is important because I know it's a lot of work to onboard and to do all the due diligence, but decreasing the rollover risk of your liabilities is key. If you find yourself in a moment of great market uncertainty like now, and you need to be raising your liabilities for 50% of your balance sheet, that's not going to be ideal. So spreading these out across periods to manage the market uncertainty. I want to touch on one point, which is international markets and international currency markets aren't necessarily an exact reflection of the domestic economy's risk or the currency's risk. It's the international investors' perception of that risk, right? So we see often these deviations in domestic markets and international markets. That's why I mentioned earlier, always benchmarking these rates.
Thank you very much. So maybe on our side, input side, we will just briefly tell you how we work with investors. We started the first fund 17, 18 years ago as Coplas. Some of you were clients of Coplas. We were funding microfinance in Central Eastern Europe. and the fund was it went up to 45 million, and it was all the investors were institutional investors. So social banks from France, Italy, Belgium, some insurance companies, the EIF, the IFC, etc. Now, the second fund that we are managing now, the successor, which is called EU, also some of you are clients of it. We are now about 25 million, and the big difference is that like half of the investment is coming from individual investors. So we managed to attract, I would say, what is called high net worth individuals, mainly Belgian and French, who are interested in mainly in the impact that our investments and I mean as your activity may create really. So they are not coming for, I would say, big returns. They are coming to have a kind of impact return, social return. And they even we established a committee so for decision making process. One is a committee where the investors participate directly and where they somehow analyze the impact of the institutions in which we will invest. So this is really something that helps us attracting, I would say, new investors, productive investors. Because I would say the historical investors, social banks in France, Belgium, etc., many of them change their strategies. They are much more concentrating on their own market. They are not or reducing or even withdrawing from the international market. So I think that this is, and we also built a very formalized theory of change to help. I'm not in charge of fundraising, but to help the fundraisers really to attract the investors to show the real impact, the change that we can somehow help to have. Thank you very much. The second question I wanted to ask, but I think I will not, is how the micro institutions, what strategies they should adopt to attract the investments. But in what is being said here, I think that we are talking about the ESG, the impact measurement, and I think it's become so obvious that there's no point asking this question, right? We can maybe just have some comments about it. It's like how to do it or not what should be done, because we are all aware of it. First of all, we are here for the impact, right? We know that we are for this, but over the years we understood that the investors require more and more, I would say, formal approach to it. So I think that the impact measurement, the ESG reporting, etc., is becoming, as it was said here at the beginning by Evangeline, it's becoming a must. So I think that this is really the answer. I don't know if you have any additional comments to this?
Yeah, no, I just wanted to add and maybe share a personal reflection. I mean, we all are following the news and we saw, I think, let me refer to Mr. President Donald Trump, when he's like addressing, and I think US is moving out from the climate initiative, and we all like, is it like ESG impact is ending or where are we going? And this is like, kind of, you see it on the news, but as we are speaking here and all are gathered as the, let's say, impact and ESG practitioners, the message is, let's just keep doing what we are doing and more. There is demand out there, and even if the news are talking about it, we, at least from our perspective, our platform where we stand, we don't see a decrease in demand, and as I said before, there is some rebalancing, maybe some other regions, some other investors come in, but the beauty of it, that this is a global platform, that allows to still to keep the focus and the impact on the thing that we do strong.
Would you like to add something?
Just one comment. I think one thing I would like to say specifically about this is be clear and transparent, both about expectations around funding, but also about your impact of being mission driven. I know that there's a lot of uncertainty, and certainly with one of our backers being the U.S. government, there's quite a bit of uncertainty, I would say. But don't self-censor your impact in this case, right? You need to be clear and upfront, because that's what's going to bring on the investment over the long term. I think we are in a moment of uncertainty, and certainly you have upcoming elections next year, 2 years after that. That's always going to be the case. So being mission-driven, being clear and upfront about what you're doing and your expectations about funding and what you're going to do with that funding for me is key.
I think that the good, very summary to say is that microfinance is really contributing to the competitiveness. I mean, Martina pointed it out yesterday during the first panel, and as the competitiveness seems to be now with the defense, right? One of the priorities of the EU. This is something that we need to bring out and just really stress when we talk to authorities, potential investors, etc. We really are here for the competitiveness. And the other thing I want to say is that the fund that I mentioned here, Popes, we had like 17 or 18 years of life. We did something like 70 investments, and out of the 70 investments, we had one failure, one of 70. And even with that, we managed to recover like 50% of our debt there. Some of the institutions present here were also part of this investment. And so again, as an argument is to say, okay, maybe the micro entrepreneurs as such are risky, but sharing the risks on different levels, like on the level of the microfinance institutions, then on the level of our MFIs, right? It helps bringing to the investors some assets which are really not very risky, and so this is what we should really put forward while discussing with them. Thank you very much. I think that's it.
Thank you. Thank you so much.